Bitcoin just made history, reaching 100,000 for the first time, but then came sneaky Wall Street, selling a massive leverage contract right at the top. And guess what they've done? They've caused a flash crash, the first one we've seen in quite some time in the crypto markets. So will everybody be buying the dip, or is this part of a bigger problem? In today's video, we take a look at that along with low volumes on the S&P 500 as we move higher. Is there something wrong with the advancing and declining stocks? NVDA seems to be holding positive gamma, and Tesla may have just entered into one. Let's talk about everything today as we cover the biggest data points, the key levels, and of course, what you need to be watching right now in markets. Guys, join us. This will be a big one. Well, welcome back everybody to the Daily Show. My name's Tom, and we've got some big stats to discuss today, including dark pools and of course positive gamma flows for Tesla. But let's get started with the all-time high records. Yes, we've hit over 50. In fact, we're at 56 now. And Ned Davis Research has done some very interesting information here when it comes to what is going on with all these all-time highs. Now, whenever you see this many and it's recorded in 1 year, the stats for the next year, that is 2025, don't tend to be very good. In fact, have a look at some of these years. 1928, well, we all know what happened in 1929. And of course, 2021, more notably in the recent terms, seeing a 19.4% sell-off in the previous year. But will 2025 be the same? Well, I think a lot of this comes back to understanding the data and understanding the type of market you're in. Remember, we started a new bull market, which we'll be looking at later on, in approximately October of 22. And you can see here Ryan Detrick over on X basically has gone through it and realized the same thing that I did as well, which was that we generally see usually a lot of all-time highs being reached in the previous years as well. The other 6 times, which were all those sell-off times, 97 new all-time highs were made the year of course, being this year, and the previous 2 years. And that meant that we were kind of already steamrolling in a bull market. This is a very interesting stat, and I think it needs to be paid attention to. Now, if we saw 50 all-time highs next year, wow, I would be absolutely terrified. So that's something to pay attention to. Another thing is that we're seeing not that many stocks outperform the index overall. In fact, if you have a look here, we're in one of the periods that's pretty rare. Guess when we last saw so little stocks actually perform? Yes, it was the tech bubble. And this is what we call a concentrated market. Obviously, things such as semiconductors and big Mag 7 stocks have been really what's leading this market. And you'll notice here that while we've seen a few more stocks start to outperform the S&P 500, it's still very concentrated. Now, this could lead into some symptoms such as the lost decade phenomenon that I've been talking about as one of my biggest worries for the US moving forward. And of course, it could also talk about what is going to perform in 2025. Well, as it turns out, when we saw these types of things, the only real thing we saw outperform in the next year was small caps. And that's an interesting one because, of course, we've started to see stats for the Russell 2000 looking better and better and better. So that's one to keep an eye on. Also, the S&P 500 has been grinding up. Now, we mentioned the idea of volume, and we'll cover that later when we look at the actual technical analysis. But we've also been seeing 3 consecutive highs with more declining than advancing stocks. Now, surprisingly, this is pretty rare. We don't see this very often. And what it tends to do is be closer to temporary peaks. So are we seeing a little bit too much FOMO coming into this market? And therefore, we're actually going to have a temporary peak soon. I wouldn't look into this too much, but I thought it was an interesting stat because it is quite rare. S&P 500 seasonality, for anyone that's trading December, we'll be looking at this. We've seen a bit of a spike this week, but we tend to stay kind of choppy, usually at the beginning, and then we rally usually into the end of the year. And technically, Russell 2000 stocks tend to do better. Now, you can see here that the stats tend to be good for December as well. Whenever we come in hot for the year, we tend to go hot into December. 90% of the time, the markets are up. Now, let's take a look at the latest sentiment surveys. It seems like retail traders have absolutely no idea what they want to be doing. Some people are bearish, some people are bullish, but we went from a big switch here from being bearish just last week across the board to now being ultra bullish again. And this is back in line with where we've been. Now, that doesn't necessarily mean we've hit the thresholds yet. We will be looking at these, particular points when people go super bullish. But 1 week change in percentage points, that's massive. It's still a very big one. The last time we saw this was actually a thrust off the lows. So people have gone from being bearish to bullish in the scape of 1 week, pretty heavily actually. Let's go over to forward PE ratios. As you guys know, I'm not a fan when the market is above one standard deviation from the 30-year average as an investor anyway. But of course, there are still sectors and areas that you can get into. Remember, if you peel back the big Mag 7 stocks, which are trading at 24x plus, I think they're actually at 28x at this stage, then usually you get the rest of the market, which is trading at about 19 to 20. So it's not as bad as it may seem, except for the concentrated parts of the market. But the real point here is that we're almost back to 2021 and we're getting closer to the illustrious 2000 bubble. And remember, there are a lot of synergies with the 1960s and the 1990s, as we've shown throughout the year, which means that we still think there's bulls in the market, but maybe not for that much longer. Booming confidence in the stock market is massive on the retail side across the board. Now, just to clarify, as I know a few people were concerned, that would generally be general retail, not you guys. So that would be mums, dads, your family members. They're just buying in and saying, let's hodl. They're not usually super sophisticated in terms of the market. So they don't really understand the risks. And that's why we're seeing household allocation at the highest level ever in the US. At the same time as we see that, though, corporate insider buys are dropping. Remember, if you want to see that household stat, jump on over to our X account and you can see it. It's pretty wild. The evolution of the Atlanta Fed GDP continues to basically be moving up. This is a good chart I've seen posted around at the moment. You can see that the US economy is still slated to be quite strong. And for now, we're not seeing the signs of weakness. Remember, this chart here and many others have shown us that everything as of November was still looking pretty good and nothing much has changed since then. So how much longer can we run? Well, a lot of this will come back down to, of course, reading things in 2025. And we do encourage you guys, make sure to sub to this channel because we are following so many lead indicators that right now have been telling us to be bullish, and rightfully so, but things will change in 2025. We're starting to get closer to the median duration. We're starting to get closer to the potential of a trade war concept. And obviously, we're due for a negative 10% pullback in that year. So will we see a sell-off? I think that's assured. Why? We're speculating at this point. And when? Of course, we'll be looking for it. Let's talk about year-end, though. Most people are bullish. The path to 6,300 still seems to be the main storyline. And Bitcoin still overwhelmingly is bullish in terms of what we usually see. Remember, as of the election, you're usually on a 12-month window for overall the crypto markets. And that's what we've seen so far. Now, we've just had the rise of Bitcoin, and then we've seen the flash crash. And we'll go through the big dark pool in just a moment. Ethereum's been holding a little bit better than Bitcoin, which we expect. And it looks like everything's kind of going pretty similar to a phase 1, phase 2, 3 kind of melded together. But let's talk about dark pools. First up, bull semiconductors. We've seen a large transaction. Now, that actually moved up on the next session. And then we saw a bear one, which is a little bit smaller. So there seems to be a little bit of fighting between Wall Street, between bull and bear positions. We'll keep updating through our weekend video on semis as we see a post non-farm payrolls, because of course that jobs number is just about to come. But take a look at this, those sneaky Wall Street people. This is what's going to happen a lot. And obviously we bring this data to you. Unfortunately, in this case, it had already flashed. I actually was just about to say, yeah, this thing's going to sell off today. And it did. But then I was making the video and it flash crashed literally as I was shooting it. But overall here, you can see a monstrous transaction coming in right at the highs. That's on the 2 times levered Bitcoin. And as we guys know, Wall Street is all over this one. And what happened? Well, it's caused that flash crash down into the 90K zone. And really around that 90, 91 area is actually pretty strong buying for Bitcoin because, of course, it marks that big demand zone, which we'll be looking at in a moment. Let's jump on over to low volume discussion. Okay, yes, the SPY has been dropping in volume. I see this one going around a lot. Everyone's concerned about it and they're all like, wow, the low volume, it's never been this bad. Well, yeah, it has. You know, generally speaking, you can look at volume 2 ways. I always like to look at volume as basically you have a large amount of people wanting stocks, and if people aren't willing to sell them, then sometimes price will drive higher because no one's willing to sell them at those levels. Remember, we've seen volume kickoffs where it drops down as we're actually rallying, and that creates squeeze levels. If we go back over though to 2021, because that's probably the more famous kind of bull rally that we've had recently, notice that volume can drop off here a little bit and it still melts higher. So we see a lot smaller moves. So the moves become more of a melt up. Then of course we do end up seeing a little sell off, which is normalized in markets. It's always a different reason. But whenever these volumes have gone down, all that happens is the ranges tend to be smaller and we end up going generally into melt up. So don't worry too much about the volume drop off. People make a big deal about that. I've never really found it to be an issue in markets. So that's one of the things that you should be looking at. Now, of course, if we lost all liquidity, that would be a different story. Options high and low levels have been updated, guys. We saw a little bit of a sell-off near the close there, and that's just really hitting 6,100. We already know that this level is a call wall now. We've gone through 6,000. We've pushed to 6,100, which is pretty much the most likely scenario. We pushed through 6,100. We pushed to 6,200. And funnily enough, that 6,200 push would probably put us on top of this trend line up here when you look at those markets. Let's have a look, though, at the overall options flow. 6,100 is where all the money is kind of floating into in terms of calls. You can see we've been in positive gamma. And you can also see if we do see a sell-off, it looks like 6,000 is where the puts are starting to come through. So watch the 6,000. Just under 6,000, 59.75 also seems likely for next week. So coming into non-farm payrolls, if the market likes it, pushes above 6,100, then we could be pushing 62 next week. If the market complains and goes, oh, I don't like the jobs number or whatever, and expects a cut, who knows, then we might be pushing down to 6,000. So I wouldn't expect too much on the markets at this stage. What about Tesla? Well, 360 plus is a big deal. We end up going $10 above that to 370. You'll notice 400 becomes the target next week, as that is the now major call wall. We're in positive gamma for that stock. Speaking of positive gamma, we're also in it for NVDA. People are stacking the at the money basically call. We keep moving higher past 145. We basically closed on the level the last 24 hours. Then we can push 148, 150. And we all know 148, 150 is the key level. We struggled with that for ages. And NVIDIA is still looking okay on the charts. Like to see semiconductors have a decent next 24 hours. Now, yields ended up dropping. And you can see here, this is a non-farm payrolls trade. I don't want to speculate too much on this. The trend line has made us kind of bullish on treasuries at around this time. And obviously feeling pretty good about the yields dropping off here a little bit. That's also weak for the dollar, which we'll look at in a moment. But you can see here that treasuries have been powering up a little bit. Don't do what they say, guys. Do what they do. If it's in the press, it's in the price. Too many guys saying, oh, treasuries are cooked. And then guess what? Treasuries up 2 or 3%. Remember, they've been trading it. We've seen that in the dark pools, the large liquidity. And I think we're probably one of the only channels that's really been sharing that kind of concept. So it's been good. High yield junk, it's okay. No real problems there. And US dollar actually dropped down. Now, theoretically, this could be good for the Chinese markets because the stim relies on at the moment, a weaker dollar. And this is a significant closure below the daily. I'd like to see the weekly, but look at this. Oh, not very nice, is it? So this does look like post non-farms we'll find out that maybe the dollar is setting up to go back towards 104. Could that be good for gold? Well, so far coiling, waiting for non-farm payrolls. Nothing much going on in gold. We'll see. But have a look at silver. It's getting ready to try to break 3150. And if it can, it's placing a double bottom, placing plenty of replication. We've been bullish here, silver. Let's see if this thing can actually get through 3150. If it can post non-farms, that could be a big deal for silver. I've kind of moved off oil at the moment. As you guys know, it's boring. But natty gas, you can see here, the Widowmaker, 350, we've got a break if it does end up occurring. As we mentioned, Tesla getting through 360. It's still a melt up, grind up kind of market. And it still looks good. As we've mentioned, we wouldn't be selling Tesla. There's really no fundamental you really need to look at the moment. It's just Trump and Elon. That's it. I would just look at price action and Trump and Elon and their relationship. That's truly all you really need to think about in this market at this stage, because that's the way that Wall Street's trading it. They're thinking, how many bonuses can we get out of this? Semiconductors, yes, they've been moving up, but it did drop a little bit over the last 24 hours. Still looks good on the price action. Even if it pulls back a decent amount down to 240, 242, I'd still hope that buyers are around there. NVIDIA, still looking pretty good, holding above that 140, 145 would obviously be key. And HSI dropping off that resistance, no concerns there. Weak dollar would be technically good for this. So Is it forming a inverse head and shoulders? Yeah, it could be. And of course, we still like this price action at this level for HSI. So we'll be watching that closely. Aussie market went up, dropped, sits around 8,500. No really big concerns there for the Aussie index. US 2K dropping a little bit. That's fine. Consolidating after such a big move in November is no problems. That is no problems, guys. We are hitting the daily 20, so we'll see whether we find a bounce here. No signs of extreme price action to the movement upside. I think there'll be a good trade on this soon, and we'll activate it when necessary. NASDAQ, tough. Wouldn't want to enter, wouldn't want to sell. That's how I feel about the NASDAQ. Daily 20 might be worth watching. There's just no support levels or anything here. It's really just very tight scalping if you wish to do so. Let's move over to the crypto market. You can see Ethereum continuing to outperform Bitcoin regardless of the news and regardless of the 100K. I'd like to think we were one of the first to really make this switch. So well done, guys. And yeah, you might say, oh, Bitcoin's better. Yeah, it is. But at the same time, there are times to own Ethereum. There are times to own Bitcoin. There are times to own crap coins. And let's be real, there are a lot of crap coins that are probably still I would say like maybe undervalued. And I put that in inverted commas because we all know some of those aren't worth anything. But at the same time, this is the nature of the crypto market. We're seeing that improvement in Ethereum, and we're also seeing that flash selling that's coming through some of the other stuff. So Ethereum hits the resistance, still unable to break. We are watching this like a hawk. I want to see this thing break through so bad. Because if it does, then of course it can start all of the other alts, which I'm sure are quite tasty. And yeah, we can see here Ethereum. Now I'm just going to load. I haven't done this, so let me just have a look at one of my favorites, guys, XRP. I'm assuming it's struggling up here. Yeah, that doesn't surprise me. And then Tron as well. Now, both of those moved so quickly, they've got to digest their moves, and that's to be expected. So exactly what you would expect. Now, let's move over to Bitcoin. So a bit of a flash sell. First one actually in a while. Now, if you haven't been around crypto for a while, you wouldn't know that this is pretty normal, but a 13% flash sell coming off Wall Street sell-off. It's to be expected. Again, 100K is a huge barrier. People are going to sell just above there. Wall Street certainly did, and they went, you know what, that's very nice. There's a lot of kind of manipulation that's going to come into these coins now that Wall Street's involved, and you'll notice here that we're getting basically what I would call a pit. So is it the time for other cryptos? It could be still. I do love me some Bitcoin. I think it'll still go 120, 130 ultimately. I don't think 90 is a terrible buy. You can see here I've got this first buy zone question mark. We got very close to that over the last 24 hours, last couple of minutes really. But this is still holding up. Unless it really takes that low and doesn't wick straight up, I still think it's pretty strong. So at this stage, Bitcoin is just, kind of melting up, moving its way up. Everyone's celebrating. That's usually a time you need to be a little bit concerned. Let's update MSTR when it comes to the markets, and this will drop off substantially. You would think, post 379 here, and that's to be again expected. What this is it's basically a blow off. I mean, you've got a market that went rampant. It disconnected somewhat from reality. Everyone was talking about it. It gets short sold. It comes off the bounce that we expected, which was the 20. It starts to kind of go up, which is normal. That's a buy the F and dip, as they say. And then we go into a bit of consolidation. We've seen this a few times in 2024, and it's nothing to be, it doesn't mean it's going to blow up or anything completely. It just means that it's just having a chill after a nice big move. Guys, remember, non-farm payrolls is coming. We'll update on the weekend on that one, so make sure to pay attention to it on the show. And as always, follow us on the socials. Make sure to follow us over on X. Check me out on LinkedIn. I'm going to start posting there in the new year, so make sure to give it a follow. Plenty of content that's different here to YouTube. And also, if you're interested in anything else that we do, follow the links. Guys, thanks so much. Basically, the summary of today is markets still remain pretty good. We do need to watch some of the stats coming into 2025. We're obviously getting into that pointing end. FOMO's coming through. Crypto markets see their first level of maybe, I guess, a little bit of freak out. But at the same time, you got to keep calm. Things are still okay. Yes, Ethereum is technically overbought on the charts, but if it can break that key level, then we can maybe get started in some of these other alts. And things are actually holding pretty well across the board. So yeah, it's all the shenanigans you usually see in a crypto market. Thanks so much for watching. We'll see you in the next one. Bye for now.